Let's get started. We've got the full spectrum of financial intermediation here, which is quite nice because we get a different perspective from each of you leading in the field. Let's again open our apertures. I started the last conversation, big picture, scene setting. What do you see the opportunities for a low carbon future? Kristen, I'll start with you and then Emmanuel, and then I'll go to Andrew at the last.
Thank you. Good morning, and thanks for having me. Well, you asked about the outlook for the year. I would say I'm positive, maybe even a little bit excited, if I may say that.
Right, I like that.
Because
I like
think,
excitement. Good.
You know, by and large, I think we've navigated a very, very difficult period in the world economy very successfully. And that means that I think there's the appetite, there's less uncertainty, there's the chance to have a little bit more of a long-term view. And also, many of the new regulatory requirements, transition plans, all of those things are actually being put in play. And when the wheels really hit the ground, I think we're going to be able to start discuss implementation, we're going to see data gaps, and eventually I think we're actually going to have a better conversation between companies, between investors, and between policymakers. So yes, I'm positive.
All right, I have a sticker on my door in my office that says, practice extreme optimism. So I'm with you.
I don't need to practice.
Emmanuel, what about you? Are you going to cheer us up or are you taking us in a different direction? What's the big picture?
I'm always a half glass full person. So for me, as a regulator, I run a regulatory agency in Abu Dhabi. We have set on a transition path since 2019. So the big positive steps for this year going forward are really positive around transition planning. I think transition finance generally is really starting to pick up momentum, and I think the private sector and public sector are really focusing on that rather than purely looking at just green all the time. I think there has to be a process to get to green.
Right.
I think carbon markets will play a part in all of this, whether they're voluntary or cap and trade markets, and I think that's gathering momentum as well globally. And I'd like to see more work globally on that. I think the standard setters like IOSCO and others are going down that path. So from a regulatory perspective, I think there's a lot of positives. And we're going to play our part as Abu Dhabi and the financial regulator in ADGM to help do that.
I completely agree. I just was meeting with IOSCO in their offices in Brussels a few weeks ago, and we've spent several years on voluntary carbon markets, a piece of looking for market-based solutions. I'm still very enthusiastic about that. Not everyone loves voluntary carbon markets. I think it is the future. We just got to make sure it's good, credible, quality projects, but we got to standardize them, and ISDA's been very helpful with that, and scale, right?
Absolutely.
And you guys have been very helpful in that. Andrew, you've got a global view, but you're a global institution. You're here in Europe. How do you see the scene?
So I'll give you a positive and a challenge in that sense.
Yeah, good.
I think the positive is in all the conversations that we're having with clients. Now, we serve here in Europe mainly the sort of larger corporates and financial institutions. It's been a net change. This is very much part of every conversation that we have with clients. That's been a big change that I've seen over the last sort of 2-3 years. So it is integrating. We're talking transition. We're talking how people are going to get companies to net zero. I think the other opportunity that's also a challenge is there's still a lot of technology out there that needs developing. And when you look at the markets that HSBC as a group now is in, more intelligent people than me have estimated it's about 150 trillion that will have to be spent at some point. And I think that is part of what we need to see in this next phase, is getting the finance there, so that when you're talking to a sort of, there's lots of companies now developing green hydrogen, which wasn't the case before. There's lots of very good examples of our client base, but actually there's also a lot of technology that needs developing, which isn't in play yet, not commercialized, and without that we won't get straight away to net zero.
No, I can completely agree. I think climate tech and clean tech is a huge business going forward. We talked a little bit about this morning. We'll talk about it as the day progresses, and we'll come back to it at the end. I think technology and innovation is critical to the solution. Kristen, I'm going to come back to you. We're going from green to brown. It is a transition. It is a multi-decade transition. There's some who think that it's binary and you've got to go there today. Not possible, not pragmatic, not politically pragmatic. So what's the value proposition for your investors as you talk about this transition?
Well, I guess at the heart is about doing things better. So if you think about some of the, so to speak, brown companies today, although I don't like using that word, some of them will have legacy infrastructures, they would be capital-heavy balance sheets, but they will also be companies that are typically well established. They will have excellent investor relations, access to capital markets. So they have some assets in their transition that a newly formed scale-up, say, an electric battery factory, for example, wouldn't have. So the challenges will be different. And I think some of the well-established company actually managed to take on transition in a much, much more successful way than anyone would have expected. And you can see the valuation metrics, you can see as a shareholder how value is going up. And for us as investors, it's all about constructing a portfolio where we have all of this at all times. And then we sort of help companies up the transition ladder, and then we take on new challenges. But I think, and just to echo your point, for a while, I think it was a too static view of what's green. So to really have the transition perspective and to look at what are the strengths of the established companies in taking on new challenges, I think if I may, well, of course, I wouldn't like to give away, the hidden value propositions as an investor, but there's lots of opportunities there.
But there is a challenge. What is green? Obviously, you have a taxonomy in the EU, but there are a variety of taxonomies, by our count, almost 24 taxonomies globally. What's green in Stockholm may not be green what's in Singapore. So how do you have a global client base, or you invest globally, how do you navigate through multiple definitions of what is green?
Well, I'm not going to tell the regulators in the room that I don't care about the taxonomy, but at the core, there's the business, and the business that will become more profitable if it's more resource effective, if it's basically doing the right thing. Mm-hmm. And so you need to have these multiple layers at all time. And something coming back to the reporting side that I'm actually excited about is that you see the companies putting in place the sustainability KPIs, which might be vastly different from the KPIs that comes out of a regulatory reporting. And then you can have a good conversation, including with the regulators. Why do we see the success factors in the transition being different?
Right.
So you need to navigate all of that.
Andrew, we talk a lot about transition plans and planning. We had a transition workshop yesterday. We've done 20 of them globally. We could probably do one a week around the world. There's so much interest in learning from your peers and how to assemble these plans, what they are and what they aren't, and helping regulators understand what they are or they aren't. You have HSBC has an inaugural transition plan. Tell us about how that's working.
Yeah, so we launched our transition plan, sort of net zero plan, in the early part of this year, sort of January. And it was probably, or more than probably, it was the most significant sort of piece of work we've done in trying to set out how we as an institution and with our clients will get to net zero. And I think what it sought to do is actually show from a governance perspective how we make credit decisions, what sectors, what the levers will be, as you were saying, around some of when you look at different opportunities. What are the things that really matter by sector? So I would say as we've gone into this, there's probably 4 takeaways that I would say. The first one is we take a global approach to our targets, to the way that we look at the business, and that's because our clients are international. I may have a client with factories in 4 or 5 markets, distribution centers in others, sales offices in the other. So it doesn't make sense to break down every sort of target by country. And so that works well, and that was a sort of first stance for us. The second one is you'll never get, and I've learned a lot personally through this, and I'm not an expert in what I'm about to say, is you will not get to net zero if you don't understand the different levers in the different industries. So there's obviously a number of sectors, which everyone will have their definition of what they are, that are the biggest emitters, but really understanding where those sectors are, what the technology is that's required there is really, really key. So when you talk to a hotel company that might run hotels around Europe, for instance, the things that are on their mind in terms of how to get the buildings to a sort of compliant status, it's very different to a big food producer into the retail, which is much more focused on their supply chain, biodiversity issues, etc. So, the sector by sector analysis, and I think the third one for me was just simply that we need the real economy as well to change, because we are at the end of the day a provider of finance, but we can't do it all alone. And the final bit that comes out as you talk to clients is the clients are also up against certain barriers, and we need to help them, and there's possibly the same barriers as we face, which is that, they want access to this technology, as I've mentioned. I'm sure we'll talk a bit about how you finance all of this, as well. How do you get a supply chain green when you've got suppliers all over the world, and the one of data, which I'm sure we could spend the whole panel on if we wanted to. But so it's been very helpful integrating it with our clients. And obviously, it's the beginning. It will evolve as science and other legislations come in. But it's been a really good start for us.
Yeah, lots of good stuff. I'm going to come back to that. And data is the key, and we have many of our member firms that are data collectors, data providers. Without data, we simply can't steer the ship. So I'm going to come back to you on the supply chain in the real economy, because I think it's incredibly important. Let's turn to COP28, UAE. Fabulous event. We had a big delegation there for many days. A real success. We'll see what Baku can come up with later this year. So how do you see the process going from your vantage point? How do you assess the outcome of COP28?
Well, firstly, we think COP28 was a great success. I think it refocused the mind of everyone and refocused the importance of what we're all talking about. I mean, this is a global risk for everyone. It's not a regional risk. It's not a sovereign risk. It's a global risk. And so from our perspective, we've done quite a lot in Abu Dhabi. And ADGM has been leading that. I can give you some examples. I mean, in 22, we came out with a carbon markets framework. We now have a voluntary carbon market that we're regulating.
Yeah.
We came out last year with a whole host of products, a framework for certain products, in particular climate transition funds, green bonds, etc. Climate transition funds is an area that we think is the real key, and we're putting a lot of emphasis into that. Another area is disclosure. So that's the regulation side, but there's an awareness side. So you've got to continue to create awareness. So COP28 was clear. The awareness of the issue and the need to action things is clear. So we're actioning things from a regulatory perspective. From a regulator's perspective, we collaborate a lot across the UAE and globally with other regulators and standard setters. Last year, we helped launch the principles of climate-related financial risk within the UAE, but that's driven from Basel. So in the coming year or so, we're going to be doing a lot more work around climate finance risk. So we'll be looking at that more carefully. Disclosure as well, we're doing a lot more on disclosure. As a regulator, disclosure is key. If you have clear, fair and not misleading disclosure, then you're moving in the right direction. You're going to avoid greenwashing, you're going to focus the mind when you're developing your transition plans, etc. Another area that we've encouraged is growing an ecosystem. So if you look at COP28 and what was announced at COP28, I mean, the Altera Fund was seeded with $30 billion US. And that has a target of over 200 billion in the coming years. And that's based in ADGM. And the regulatory framework that we built, we're building, and not just building regulatory frameworks, but supervising them and making sure that they're operating properly with transparency. That's really the launch pad. And then you've got a couple of other key things with regard to COP28, because at COP28 last year, we all said, this is not the end, this is the beginning, right? This is just one step in a long journey. And Dr. Sultan, the president of COP28, came out only very recently last week and announced that there'll be a summit just before COP29 in the UAE talking about how sustainability and AI can work together. And if you look at those two areas, they're huge agenda items for the UAE government, and in particular Abu Dhabi and ADGM.
I'm going to come back to AI in a second, but while I've got you, voluntary carbon markets near and dear to my heart. You know, we worked with McKinsey for 2 years, if Sonia's here, trying to restart and recreate this market, which actually has been around for several decades. There were some dodgy projects in the past. We think that we've got a system in place where we can have very good projects going forward. We've created legal structures by which these things are verifiable, and we think we can scale them. You're an important part of that. What more do we need to do to overcome some of the skepticism? How can we continue pushing what I think is an incredibly important piece to the solution?
I think we have to in some way create more confidence and trust in the system, in particular around the verification and validation part, because that's key.
Yeah.
That third-party verification validation means everything. Investors, if they don't have confidence and trust in that, they're not going to invest. So as a regulator, we want to make sure that we're at the forefront of helping facilitate that. Because voluntary carbon markets, like I said earlier, are not the whole solution to any transition planning. They're just one small part, maybe a larger part for some, depends. And we also have cap and trade markets, let's not forget. And I think there's more to do there as well. So I don't think it's just voluntary carbon markets or cap and trade, mandatories. It's a whole host of things.
Right. So quality projects, verifiable and standardized. So we'll continue to work on this.
And let's not forget, credits need to be retired eventually.
Right.
You can't just keep recycling the same old credits. And it ultimately depends on what the credit is.
Right. And there's both nature-based but also technology-based solutions. Andrew, I'm going to come back to you on, you mentioned supply chains, the real economy. I made a stop in Stuttgart a couple of weeks ago. I like Stuttgart because I like German cars. But it was great talking to people who make real things and the challenges they face. The German auto industry faces competition from Chinese EVs. So there's a choice for Europe and the United States. Do you want green vehicles or not? What's more important? But what they said to me is, we're happy to transition from internal combustion engines to EVs, but if the electricity generated is coming from coal-burning production, we've not done anything. So you have to look at the full supply chain of the real economy. Talk a little bit more about your experiences for HSBC and looking at the real economy.
Yeah, sure. So I think it's a great question. It's not, and as you just pointed out from that conversation in Germany, it's not an easy one either. So I don't think anyone, there's no sort of global overall answer I think that you can give there. I think the first stage is, as you were mentioning, is really starting to look at this for your individual, I would say, individual sphere. And some of them go across boundaries. They're not, you got such a multi-level of analysis across countries that might be at different levels of adaptability. They go across different levels of fuels, etc. So I think there's not an obvious answer. And that's why I was going back to my initial bit, which is I think each sector will have a different view. And I think we're still a way yet from being able to say we've got green supply chains. But where it matters, that's the most important. So that's why you're seeing a whole bunch of technologies that are starting to come through that need funding around sort of, particularly around some of the sort of carbon storage or the carbon removal or just how you recycle some of those biocarbons back into more heavy industry. So I think this is probably maybe a conversation for in 12 months' time. We'll all have a better feel as to where it's going. But it's definitely a vital piece of information that's required.
So, I'm going to come to you on supply chain. I'll tell you a little story. You've got one of the largest battery factories in the world in Sweden. Many of our institutions were integral in providing the financing for that. They go to the opening day, cut the ribbon, and there's protesters. Why aren't people protesting? Because the cobalt comes from the DRC. There's questionable ways in which it was extracted and shipped. And then the question is, well, how do you recycle batteries? So we go from thinking this is an incredibly green project to, well, there's upstream and there's downstream problems. How do you think through the supply chain?
Well, coming back to Andrew's point, you need to understand the supply chain in a whole different way. And using that concrete example, the single most successful part of that operation has been the battery recycling part of it. Because the ability to recycle precious materials, etc., is key for this to work. But if I were to kind of move up a level, I'd say we must not be fixated on one type of technology here, because there's a real risk that we say, oh, let's all go EV. And EV might be part of the solution, but it might also be not the only solution, right? And I see a real risk, because given this enormous transformation that we're embarking on, we somehow want to make it possible to grasp. We want to make it concrete. So we want to look at the certain paths that we think are going to lead to net zero. And there will be failure. There will be innovation, and then we will try different things, and some of them will work out, some of them won't. And to kind of manage for all of us to have that mindset of allowing innovation, failure, learning, and so to speak, move up the knowledge ladder, I think it's key, because I see a real risk that we become too fixated on certain paths, and then we figure out there's always a problem somewhere in the supply chain. And guess what? There were problems in the supply chains before as well. But somehow, if we are too single-minded, that's probably the biggest risk I see to the transition happening.
So obviously, there's a lot of stories in the supply chain. We could go on all day, but you're in the process of evaluating countless numbers of investments. So you need standardization, disclosure. Are you getting what you need to make intelligent choices? What more do you need to see in terms of where you put capital to feel comfortable that it's going where it should be going?
Well, if I look at our investee companies and also the ones we directly own, where we also need to put together transition plans, we're at early stages, right? And I think eventually we've moved to standardized disclosure, and there will be ease, data gathering will be easy, etc. But for the moment, it's a tremendous learning exercise. There are parts you can fill out. There are parts where they're just blanks. There are parts you might not even understand what you're being asked for. And we need that process to happen. And it's harder for the small firms compared to the big firms. So we need to make sure that we're not actually creating sort of barriers to entry through new regulatory requirements. And then our role as investors is also a little bit to be the voice on behalf of the companies and say, from a shareholder perspective, we see that this is working out. These are all in the process of doing the right things. But in our listed equity portfolio today, it's about 50% of companies who have any sort of transition plan. And so we also need to be realistic about where the current state of knowledge is, and allow that knowledge build up to happen.
But you're actively pushing them, the half that do not, that they need to have transition plans at some time horizon.
We are actively pushing, but if we're also going to hear companies that say, look, I cannot find this data. I don't even know where I would find it. And then we also need to be the voice of the companies towards regulators, towards stakeholders, society at large, and say, look, this is a good end game, but we're currently not there. And we're definitely going to get, static data. We're not going to be able to follow a transition yet.
You mentioned the R word, regulation. Emmanuel, tell me about your vision of where regulation is going to ADGM, your oversight. How is that evolving? What's front and center for you, and what's in your strategy?
Well, we've done quite a lot in the last 2 years, but as I said earlier, we don't normally stagnate. We're constantly reviewing where we're at. So I'll give you an example of a few things that we're looking at in the next 12 months in particular. 3 key areas. One is we're going to be coming out with a consultation paper very soon around disclosure. So we brought in a disclosure framework last year, but we're going to issue some more comprehensive guidance around that. It's going to touch on things like greenwashing, for example, around disclosure. I mean, the concepts of clear, fair, and not misleading are not new for regulators. They're enshrined in pretty much every international regulatory agency's legislation. Another key area is around naming. So we don't want misleading types of branding on products and services. Some other areas that we're looking at as well are around investment strategies, disclosure around those investment strategies, as well as things like taxonomy and some other areas as well. The other key area that we're working on over the course of the next year that we're looking at closely is around climate change financial risks. So we've been looking carefully at Basel. We obviously have the principles through our Sustainable Finance Working Group that we've adopted, but we want to enshrine that in legislation now so it's enforceable rather than it just being in high-level principles. So that's another area that we're really focusing in on, especially for the bigger companies. So companies that, say, have a 68 million USD turnover or a 6 billion AUM, so something above that. So we're trying to create some sort of threshold to target the bigger players because that's what's going to move the rest and assist the rest as well. And then thirdly, transition planning. We brought in our climate transition funds framework last year. Now we're looking at transition planning and disclosure around transition planning. I mean, no one has really come out with a substantive framework around that yet. The TPT in the UK has made recommendations. The FCA will eventually come out with some legislation very soon, I would think. So we're following that. The EU have obviously come out with the due diligence directive and the reporting directive. And so we're following that very closely. The EU is probably, in terms of jurisdictions driving sustainability, the EU is one of the leaders. But don't forget, Hong Kong and Singapore are doing a lot of work as well, to be fair. My home country, Australia, is still a bit slow off the mark, but it'll get there. But there's a lot to do. Transition to me is, how do we help finance? As a regulator, I'm trying to set up policies that help the finance industry help finance brown industries become green, exactly, or new industries that will be green. So it takes time and it takes a lot of money. Jean was talking earlier today, there's money in Europe, it's just getting it into the right projects.
Right.
So as a regulator, we just want to make sure that when people invest in those projects, that they're doing it in a clear, fair and transparent way. They don't lose their money either.
We have hope for Australia. My colleagues are there as I speak, and we're doing an event there, I think, in March of next year. So we have a great presence in Australia. Andrew, I'll come back to you. So how often do you think about refreshing your transition plans and planning? How dynamic is that process, and how is it integrated? Is it across different geographies?
So look, as I was saying, we've only launched it 3-4 months ago in that sense, but you're right, it will always be dynamic as new science comes in, as we see how things, as we were saying here, develop and how clients perform. We will, to a certain extent, need to upgrade it. But the reality is, it's part of our policies. It's part of the way that we make decisions when we look at credits. Firstly, I would say our ethos is about supporting our clients as they transit. But obviously, we need to make sure that is going in the right direction. And we were talking about regulation before. We work very closely here, and I've got my Europe hat on with the European Central Bank, with the EBA. So we do have transition plans here in Europe for all of our clients. As I say, we're in the larger clients. I'm not in the SME sector, and that is helpful. That has, I think we have to recognise that the EU has helped us, so we can use some of the learnings here to other parts of the group where we have 150, 160 years worth of heritage, different sectors, different industries.
Right.
There won't be a one-size-fits-all across all of those patches, but so it's something that will be updated in that sense. But I think as we were saying here about investments, ultimately we know where we want to go. We now need to understand the blocks to get there. So I don't expect, it's not a document that's going to get updated every week, but it is only as good, I would say, as science tells us today. And as I said right at the beginning, I see a real urgent need around bringing some of the technology that we don't have today up to speed, whether it's for equity type investments or whether it's more of a debt and partnership type things. And I agree with what we've just said. It's for me at the moment, there's a big mismatch I'll speak for Europe now, between the financing and the opportunities. It's not so much that there isn't funding, but I think we need to get clearer again through what is a debt funding. Where do the banks play their role? Where do the equity providers play their role? Where do governments and other sort of more government banks and agencies, where can they stand in that middle for those longer tenors? It's a very, very dynamic world, I would say. And
what would your wish list be for Europe? I have as I said, my talking points are worn out. I've delivered them in Brussels for so many months and years. But what needs to exist here? What needs to happen next? Is it securitization? Is it venture capital? What would you like to see?
Yeah, I think, look, in Europe, there's definitely the debt markets are active. We know that, for instance, if you take the US, some of the capital markets are more active there. But there's a lot of discussion going on in Europe just at the moment across many different agencies as to how we can get a more active capital union. So that would that would definitely help. I think from Last point, maybe from just a legislation perspective, just, not every industry has got the same level of guidelines.
Right.
So if you take the automotive, it's pretty well signposted what the world, the bodies, the governments are expecting in that sense. We have other, high emission sectors where that needs to happen as well. So I think that would be more, and I'm not an expert in all these sectors, so I can't tell you exactly what the legislation needs to be. But that's the feedback I get from the clients, that in some of these industries, you're still looking ahead and you're not planning blindly at all, but it would be helpful to know where the ultimate regulators would like it to go.
Chris, I'll come to you. And actually, I was going to turn to technology in the waning minutes. How do you, so you answered the question you wanted to answer, but also think about how do you view the technology journey and how is it reflected in the way in which you do your job on a daily basis?
Well, if I start at a sort of the opportunities I don't see happening, which I would love to see happening, to pick up on your point, there's a real challenge how you take on new technology from a regulatory perspective to allow sort of the test beds, the scale up in a way that can actually make investors assess it, etc. I'll take a very practical example from my own country, Sweden, which comes to nuclear power. So Sweden had legislation in place that you can build old traditional reactors in certain parts of the country, and that's the only thing you can build. You cannot build new reactors, and then all of a sudden new technology in SMRs came in. Everybody got very excited, especially in the investor community. But there was no way no regulatory framework around these things. We didn't even know how to test it, how to build it. And obviously, as always happens in Sweden, people get together, they find a pragmatic approach. But to find that sort of pragmatic scale-up / test bed / new technology, how do we fit that into the sort of not static framework, but still sort of stable framework? That I think is a real challenge, but it is the end game if we want to do this in a prosperous way, which I think is the only way to get acceptance around transition. So yes, I would say finding ways of actually allowing new technological developments and failures to happen is key.
And that's reflected in your investments. You see that? Are you an early stage technology investor as well?
We are as well. When it's venture, the very smallest tickets, it's not for us. But apart from that, we have a wonderfully free mandate, and the only thing we can't do is actually commodities for some sort of historical reason. But apart from that, anything, anywhere in the world, yes.
I had a conversation yesterday about nuclear power here in France, which is at 80% of electricity generation. And someone told me, who says, we don't know how to build reactors anymore. Last one we built, it was 10 years over the timeline and over budget. But the technology has changed. But the people who were originally designing those reactors are now gone, and we need to completely rethink how we do it. And sometimes we think that the knowledge is cumulative and doesn't stagnate, but in fact it does, right? Yes. So you have to rethink even technologies which are currently legacy systems.
And you need to make sure there's R&D, there's this entire sort of ecosystem, coming back to your point, value chain, coming back to your point, and some of that actually, we lost a little bit of attention on that for a while, and we need to build it back.
Emmanuel, let's stick on technology. We were talking in the green room about the importance of tokenization. AI is on everyone's mind, as it should be. It's a transformative technology. How are you looking at some of these digital technologies as it impacts the way we think about climate?
Well, as a regulator that prides itself on innovation and progressive thought leadership, there's two things. One, when I was talking about voluntary carbon markets earlier, we have a voluntary carbon market in the ADGM that's using a tokenized system. So tokenization is part of the solution, and it can be. We have to be careful about not getting caught up in native crypto type discussions where energy use is quite high. That's another issue. But tokenization generally can be a force for good with, for example, the use in carbon markets. Right. AI is even more interesting. So we started playing around with AI quite a few years ago, and the first iteration of it was we took our legal regulatory framework and we digitized it. And so by digitizing it, we've given ourselves a source of data information that we've now, with MBZ University for AI in Abu Dhabi are working together to create a solution, an AI solution on legislation and being able to identify the key areas of legislation that relate to a particular activity. So that's one really key area that we're working on, and that applies to sustainable finance as well. More importantly, I guess, are areas around authorization. We're looking at how we as a regulator can review and digest data and information from applicants using AI. But even more interesting, supervision. So taking financial reports, including those eventually around financial risk,
Right.
and having proper data, like clear verified data in that process, that AI can then help identify where the risks are and potential breaches are. And so we can focus our mind more quickly and more efficiently on where we need to. Another area, I mean, this is more broad around AI, is we're using it for translation a lot more around legal documents. So AI is playing a really big role for us going forward as a regulatory agency.
And a good question from the audience here, and I'll read it. Coming back to regulatory requirements, what are your views to adjusting them to a sustainable status of the project or counterparty? If we think a more sustainable project, everything else held equal, can have fewer risks aside from pricing advantage, why not capital requirements? I'm not sure I understand the question, but let's answer the question that we would like to have been asked, and that is, how do we optimize regulation in order to have better and more efficient markets in this space?
Right. I hope I can answer the question properly. I mean, I come from a principle-based regulatory perspective. I don't think prescriptive legislation works. I think it's too narrow. Principle-based regulation, to me, gives you, and I believe flexibility is not a word that I should use here, so I'm going to use adaptability. So it's really important that regulators have that adaptability. Because you were talking earlier in relation to different sectors and different circumstances for different industries.
Exactly.
So you have to be able to be flexible. And so we look at that from a regulatory perspective.
Yep.
So when we're building regulation, we look at it from a principles-based perspective. And then if a particular industry needs more specificity, you can do that through guidance, for example. But we take regulation, very seriously, obviously, but we take it from a perspective of engagement with industry. So if it's the motor vehicle industry or the financiers to that industry, we would look at that specifically and engage with that industry to see what are the challenges in transition planning for those companies.
Right.
I mean, that to me is very obvious.
Right.
And you have to look at every industry on its merits.
Exactly.
You can't just lump everyone into one basket, because that's never going to work.
They're all different.
Yeah.
And just to add to that, we need to remember that climate risk, nature capital risk, it augments the risk universe. It doesn't mean that the other risks go away. So the risk with climate risk, if I'm allowed that pun, is that we forget about other risks. So we become so focused on monitoring and even maybe, steering capital adequacy rule, etc., on the base of climate risk that we actually forget other risks. If I think about a bank, for example, they might be fantastic. They might have no fossil fuel exposure whatsoever, but they're lousy at credit underwriting. It's not a good risk decision to go into that bank, right? So we need to make sure that the regulatory responses, the investment decisions, the credit underwriting takes the entire risk universe into account. Because as always, when something becomes hot or salient, there's a risk that we focus too much on that at the expense of other issues.
Do you think that's happening now?
I see some evidence of that, and I wouldn't say from a regulator perspective. Rather, if I look at, for example, we're big investors in private equity, and we see some new private equity investors coming into play who are very focused on sustainability, but they might not have the track record of actually successfully going through the value chain of private equity as some of the more established players. So what do? You go with the established player who might not label his or her fund green,
Right.
but when you look at the actual activities, what they do at the end of the day is transition. Yes, that's where I'm going to put my money. And coming back to your point, it's then extremely important that you have labeled these funds in a way from a regulatory viewpoint, so you actually steer capital in a way where risk is actually high.
Andrew, I'll give you the final word, but let me follow up on your private equity point. Do you have any concerns that we're seeing projects risk migrating to private equity because of regulatory arbitrage, even though it's for a good purpose, right? The objective is climate, sustainability, that's fine, we all want that, but it is a product of regulatory arbitrage, and therefore there are potential risks that aren't necessarily transparent. Do you worry about that?
I'm much more worried in the credit space compared to the equity space, actually, because I see the growth of private credit outside the banking sector. And as an investor, some of that is perfectly fine and legit, and it actually reaches clients that would not be served by traditional banks, so you can have structures that work better. But there's a real risk that actually it's a less monitored area and disclosure is less transparent, and then I'd rather have the banks do it.
Well, I noticed you looked at me when you said credit underwriting, but I decided you were looking there. So,
Andrew, I'll give you the last word. Is it a competition for your time and attention in terms of different risks, different opportunities, or is climate sustainability just an integral part of what you do every day? It's not a trade-off. It is part of making credit decisions.
no, look, I think this is a big challenge, as we've just spent 40 minutes talking about where we're going on this for clients. But ultimately, it's an intrinsic part of life with our clients at the moment. So I think two things. One, yes, it's a part of a credit decision. At the same time, we as a bank know that we have to look at things possibly slightly differently, but not so differently that we're taking it into equity, as I was talking about before, into other spheres. But we'll probably have to lend on a slightly longer tenor to some of these projects. We need to see things slightly differently, but we can't obviously lose our prudential sort of way of looking at these. And that's why I was saying we need to get the match right between the type of finance and the types of projects. And I think that's probably what was being said in the first session this morning.
That's a nice way to end this panel discussion. Andrew, Kristen, and Emmanuel, thank you very much. Ladies and gentlemen, please give us a round of applause.